Hi, good morning. Welcome everybody to our webinar on Decoding the Omnibus Proposal. I think we'll wait 1 or 2 minutes to let the last people come in, and then we're ready to get started. Please don't hesitate to ask any questions you have in the chat or using the questions menu in the bottom right. We will get back to all your questions at the end of this webinar, where we'll have plenty of time for a Q&A. So yeah, please don't hesitate to pop your questions either in the chat or using the questions panel in the bottom right of your screen. So it's been exactly 1 week ago where we were all sitting behind our laptops following the presentation of the EU Omnibus proposal. Now that the dust has settled a bit, we're here today to decode the Omnibus further, dissect what it actually entails and what the impact will be for your companies. So welcome all. My name is Jules Janssens. I'm Sustainability Solutions Manager at Coolset. I'm joined today by Jasper, our sustainability researcher, and Yuri from Flint. If you would like to do a short introduction, Yuri.
Yes, my name is Yuri Zwart from Flint. I'm a senior ESG consultant. So on a daily basis at Flint, we help companies embedding sustainability in their company and accelerating value through ESG and CSRD.
Great, thanks. So what's the plan for today? We'll first start by understanding the Omnibus. What's the background behind this proposal? And what are the impacts on the CSRD, the EU Taxonomy, the CSDDD, the VSME. Then we'll dissect what is official up until now and what is still unofficial. And then at the end, we have time for a Q&A. Before we dive into the details, we have a few questions for you to get an understanding of where you're currently at. They will pop up in the on your screen right now. So if you could all give a vote, then we can get an idea of where you're all standing. See that most people attending today are companies subject to mandatory ESG reporting requirements, and also a lot of advisors or ESG service providers. And some of you also companies that are interested in ESG reporting. Good to see that it's such a wide spread today. Hopefully we can provide you with some good insights. Then the second question, with all these changes, what would be your main motivation to continue with this ESG reporting? So we see a majority of you answer because ESG is part of the long-term business strategy and sustainability goals. And the second biggest is to stay ahead of future regulations and avoid last-minute compliance pressure. To maintain credibility with investors, banks, or business partners comes third. So we see that basically almost all of you are planning to continue with ESG reporting. And then the final question before we dive into the content. If exempt from mandatory reporting, how important is voluntary reporting for your stakeholders? Is it either highly important, moderately important, or not important at all? Here we see a bit of a more spread, with most of you answering moderately important, where some stakeholders value this information. Second comes highly important, where stakeholders expect continued transparency. And around 15% says not important. Stakeholders do not prioritize sustainability reporting at all. Thanks all for your questions. It's good to see where most of you are standing. Then we can properly address this during this webinar further. For now, I'd like to give the word to Yuri to dive into the details of the Omnibus.
Thanks, Gilles. We'll start with the facts on the omnibus. So the 67-page document was actually published on February 26th, which is a week ago, like Gilles said. And it's important maybe to give some clarity on what an omnibus is. The omnibus regulation is basically a legislative instrument used by the European Union to make multiple changes to existing law in a single piece of legislation. In this case, the legislation will impact the current proposals on the CSRD, the CSDDD, the EU Taxonomy, and it aims to reduce the compliance burdens, especially for mid-sized companies. And it's based on the push from the European Commission to simplify the sustainability regulations. It will entail major rollbacks for the CSRD, the EU Taxonomy, and CSDDD. And it is framed actually as a competitive measure, but it's widely criticized. You see some big companies stepping up and saying this is not competitiveness, but this is deregulation. And it also undermines the EU ambition to be net zero in 2050. So to provide some more background on why the omnibus was introduced, the omnibus in the beginning pages mentions changing Europe. It mentions geopolitical factors like the Russian war in Ukraine, trade tensions between the US and Europe, and the aim for global competitiveness and issues raised, concerns about the burden of the sustainability regulation. Then Draghi's report on competitiveness in September 2024 highlighted that the regulatory framework of the EU lacks competitiveness and resilience, and noted that the CSRD and CSDDD impose significant compliance changes and costs. So then in the Budapest declarations in November, they dived into it a bit further. They called for a simplification revolution and basically demanded a 25% reduction in reporting requirements. So that's basically the background. And then in 2025, they released a competitive compass strategy, confirming actually the need for the far-reaching simplifications in the sustainability finance reporting. So basically, there are four main criteria or main drivers of this omnibus proposal, which are stated on the sheet. So if we break down the omnibus a bit further, it basically delays the key sustainability directives by 2 years. It reduces the number of companies required to comply with the CSRD, and we'll dive into more details on the next slide. It weakens the due diligence and accountability, which we know under the CSDDD. It makes the EU taxonomy disclosures voluntarily for most firms. It's basically the main talking point. And it introduces the uncertainty for business that have already invested in compliance, so the tier one companies. So if we look at the changes for the CSRD, you can see we've named several topics on the left column. To start with the size, the threshold, there's the main difference is the number of employees. It goes up from 250 plus employees to 1,000, which then covers significantly less companies. So where the CSRD, as we now know it, has above 50,000 companies who have to comply according to CSRD. With the new proposal, and I want to emphasize on the word proposal, it will be less than 7,000. For the last wave of CSRD thresholds, so third country enterprises, the turnover goes up, it triples from 150 million turnover to 450 million turnover. and the value chain reporting, so that companies request documents from other companies as they are compliant with CSRD. The scope is also significantly less. You're no longer required to obtain data from all your suppliers, but only from CSRD companies. So no requirement for non-CSRD companies. Then if we dive to the assurance, for us auditors out there, in the previous requirement, we had limited assurance, which plans to bumped up to a reasonable assurance. And in the new proposal, the limited assurance remains, and there's no requirement to go to reasonable assurance in the upcoming years. There are fixed deadlines for initial disclosures and audits in the previous requirement, and now it all has been delayed by 2 years. To also say something positive, the double materiality state. So that's one of the key factors, of course, of the CSRD, requiring both financial and impact materiality. No proposals were changed there. Then the upcoming ESRS sector-specific standards were upcoming and going to be introduced in 2026. They were suspended and or removed. So just a quick question on where you are with CSRD reporting. When are you planning to continue reporting? So I see most of you opt for either voluntarily or mandated to do so by 2028. See a limited of people moving through the VSME. So that's good. Most of you are still planning to voluntarily report on it. And several are just stopping all sustainability reporting. Yeah, we see the shift moving to voluntary reporting. Interesting. So then the changes to the EU Taxonomy, second part. Detailed changes were announced 21 days before the Omnibus in the document you see on the right side. It's important to notice that the Omnibus made the EU Taxonomy reporting voluntary for most companies. So the disclosures are limited to 450 million turnover and more than 1,000 employees. And you can use an opt-in option to disclose over the EU Taxonomy. The disclosure templates, as we know it, are simplified, which 70% fewer data points. And operating expenses disclosures are made totally voluntarily, so you only have to report on CAPEX and revenue. And yeah, based on what we see a reduced transparency in sustainable finance and investment based on the new changes in the EU Taxonomy. If we then dive into CSDDD, it's basically the same story. So it's also delayed to 2028. The scope is also limited, so only the tier 1 suppliers are covered. So you only have to go to your direct supplier and not further in the value chain. It also removes the civil liability provisions, making enforcement harder, and the penalties are also limited. It also eliminates the NGOs and trade unions standing to bring lawsuits to these companies. So that's out of there, and it aligns more closely to the business-friendly national laws instead of the EU due diligence law, which was quite a bit more firm. So in the last, basically voluntary disclosure standard we have is the VSME. So it remains voluntarily and is unchanged by the Omnibus. It provides actually a lighter and more scalable reporting alternative for SMEs, for the smaller companies. and it has a modular approach. So you have a basic version of the VSME and then a comprehensive version. The basic version is around 11 data points, and the comprehensive is 9 data points, so it's very limited. And it has more of a checklist approach. So you can actually check certain topics, for example, energy use, etc., scope 1 and 2. So it's significantly more limited than the CSRD. But it aligns with the market need and green financing requirement. And it also states in the Omnibus that it will adopt a new version of the VSME based on the VSME as we know it right now. So that's also more interesting. It will be a bit more coverage for the smaller companies to actually state we have written this in the VSME and that's it. So normal additional checklist from the big CSRD companies.
Sorry about that. Just switching microphones. So I'll take it from here. Thanks for that, Yuri. Before getting into the bigger picture of the Omnibus, I'd just like to mention that in the comments it was mentioned that the threshold for CSRD is indeed 1,000 employees, but still the old thresholds for the financial metrics. So that was in the slide we mentioned 450 million. But that is indeed, as Timo also mentioned, about non-EU companies having to report in the future. So that was a bit unclear, but good to rectify that and mention that it's indeed mainly focused on the 1,000 employee threshold that companies now have to focus on. So Yuri went on a bit of a deep dive and told us about how to assess the current and future changes of the Omnibus. And I'm going to tell you a bit more about how to see that within the broader picture. So let's first have a look at what has not changed due to the Omnibus. So it's good to mention also, as Yuri touched upon, that the double materiality assessment as it is now remains. So companies reporting on CSRD must still report on impact and financial materiality. And that's interesting because for a while there were rumors that the Omnibus was also going to remove impact materiality from the CSRD, which is of course integral to having a holistic CSRD approach. So it's good that that's remaining. The 10 ESRS topical standards still apply, though some data points may be removed. The European Commission has said that within 6 months they want to have a clear plan on which data points will be removed. For now, that's still unclear, but they have mentioned that this will be around 25% of data points for companies currently reporting on CSRD. CSDDD scope is unchanged, so it still applies to around 6,000 EU companies and around 900 non-EU firms, and the risk-based approach remains. So companies must still prioritize due diligence where the risks are highest. And then also good to note for EU taxonomy is that the technical screening criteria, as well as the minimum safeguards for EU taxonomy alignment remain, but there will be some changes as to how specific they are and how to assess them specifically. And here the benefit is that we already have the document that Yuri also discussed briefly for the EU taxonomy, so that it gives quite some context on how to report. But also, as Yuri mentioned, a lot of companies previously falling into the scope of EU taxonomy no longer do. So it becomes more voluntary, but companies that still want to report have a clearer understanding of how it should be done so now. So what has officially changed? This is an interesting question because officially very little has changed. It's just a proposal, as is in the name, and it is not yet the law. So I'll have a slide on that in a second as to explain how we go from a proposal to a law. But basically, to put it in a nutshell, the next steps are for the European Parliament to review the Omnibus proposal, and this then has to be approved by the European Council. That's easier said than done, as 20 out of 27 EU countries have already transposed CSRD into national law, which means that where the European Union, they hand out or they implement these laws, it is up to the national member states to implement them. So 20 out of 27 have already done that, which means that just deleting that from law won't be as simple. But that said, we don't think that a full reversal, we think that a full reversal is unlikely, but there will be legal and political challenges ahead, which means that the omnibus won't be official within, I think, at least definitely the next half year, but we could even see that it comes out as late as 2027 when all of the member states have agreed in both the parliament and in the council. So therefore, the conclusion of this slide is that the companies should not assume that these changes are final, which is frustrating, as there we have already gone through a time of uncertainty now with various draft versions, and then also the first wave of reporters not knowing exactly how the audit was going to look. So this doesn't help with adding certainty for reporting companies. What has changed unofficially? So around 80% of companies now seem to be excluded from the CSRD scope. And this just adds the fuel to the fire of uncertainty. So companies, for now don't have to report. I don't know if you hear the drilling. It's our upstairs neighbors. But the national governments may slow down enforcement, which is also something that we have to wait and see. So of course we'll keep updating you on those changes as we go along. And the race to the bottom has been reignited. So basically that talks about how deregulation is a driver for trying to outcompete each other in terms of cheaper and less labor related or rules related operations. And that's something I think that we're trying to leave behind in the EU, but now has somewhat been opened up again, that conversation, due to the deregulation drive. The narrative of sustainability as a burden is once again growing. So I've also seen that with some of our customers, that finally sustainability was being picked up as an opportunity rather than a burden. But now by this narrative being shifted again, a lot of companies are saying, well, it was a cost and not so much an opportunity. And that's also something that the European Union is actively promoting, because they've published kind of a cost analysis of the sustainability regulations, but they haven't done a cost-benefit analysis. So they haven't explicitly mentioned, okay, what would be the benefits if we were to keep this implemented? So it kind of gives everyone a skewed image of what deregulation looks like. And last but not least, so trust in the EU is weakened already. So even if this were to be reversed, it kind of shows that the European laws can be reversed, even if they have been transposed into national law. So this sets a precedent for the EU to be seen as unreliable and unpredictable. That said, I think these are all points that, should you want to discuss this with, or want to see changes, this is the time to go speak to your members of parliament, to go speak to your politicians, to reach out to them and voice your concerns. Of course, that can also be that you are for simplification and just want to see it done in a better way. Whatever your opinion is, now is the time to speak up and share your voice. So here, a bit of an overview of what has changed, or at least what will change if the law goes through. But first, let's have a look at what the steps are that we need to take. So the European Commission has now sent the Omnibus proposal to the European Parliament. So that's what we saw last week. That was the big review of the Omnibus with the document being published. So now the European Parliament is going to do what they call their first reading. So that means that members of parliament vote, and here amendments are possible. So that's also, once again, to reiterate that now is the time to speak to those members of parliament and raise your voice. Then you have the European Council, and this is basically where the heads of state come together, and they need approval from 15 out of 27 countries, but also that those 15 countries need to make up at least 65% of the EU population. So that's two big hurdles that the EU still needs to go through. That said, we don't think that there's going to be major changes, also because the European Commission, probably behind closed doors, has already assessed kind of the support for the Omnibus. We know that Germany and France have supported this massive deregulation drive, and them being the two biggest EU member states, I think it's safe to assume that they're lobbying and pushing for this to go through. So I do think that there's opportunity for things to change. But from my current perspective and what I've read and what I've seen and what I've heard, I'm expecting this to go through in one way or another. So what then happens after the council review is that they have negotiations and a second reading. And here, if disagreements arise, the three kind of the council then goes to trilogue discussions, and here they then have final approval or rejection. So that means if there is no agreement, the omnibus could be delayed until 2027. I think that's an interesting takeaway from all of this, is that, the omnibus unfortunately isn't as final as many of us had thought last Wednesday, because it still has to go through the whole legal channel, all the legal channels in Brussels. And then last but not least, of course, once the implementation phase is starting, that means that the omnibus is passed into law, and then member states must once again integrate the changes into national law. But what that all means is that in the meantime, before those changes are made official, the national law still applies. So for countries still reporting or still thinking about reporting or unsure about reporting, until we have a new law which is validated by the omnibus, we will see the proposal being being just a proposal for now. So what does the market say about the omnibus? So investors managing 6.6 trillion euros have already warned that rollbacks will harm economic growth. And Nestle, Unilever, Mars, for example, massive companies have already mentioned that they oppose the deregulation drive. This is also, this also shows that weaker transparency threatens sustainable finance, making informed investment harder. And here I think it's also important to mention that these big companies that want to keep the due diligence practices alive, of course, also have an interest in seeing, which suppliers are more sustainable. And then some of the smaller players, some of the smaller companies do have to carry more of that burden. So I think that being said, there is a good point to be made about making, for example, CSRD quite a bit simpler, but to move it from the table like this has faced a lot of criticism from different players in the market, including many of our customers, our CSRD customers, who are now left thinking about how to react to these changes. So we're hosting this webinar together with Flint. They're one of the major ESG players in the Netherlands, and we've had several discussions about how we see this playing out. So we think that the EU will face major trust breach if this goes through without hiccups. Hiccups here meaning that basically they make amendments to, for example, the scope of CSRD or the delay or the data points. There are, I think, changes for them to make to kind of keep the goal alive of reaching net zero by 2050, but also to ensure that sustainability in Europe is not just a buzzword that fades into the past. Early adopters face setbacks, but commitments to ESG remain valuable. What I mean here is that it's important to also mention that many of these companies may feel fooled by the European Union, as they already started reporting on CSRD, have potentially already paid their accountant for the CSRD audits, and this can be upward of 100,000 euros. So that's money that may be, to that extent, wasted if it's no longer mandatory. That doesn't mean that it's not good to do an audit and to have a review of your whole company's ESG performance, but it does mean that they have done so with the knowledge or with the understanding that the European Union mandated this, and that this no longer represents the truth today. We also see that past investments in sustainability should be leveraged and not wasted. So companies that have already started reporting should keep doing so, as this is more of an opportunity than a burden, as Yuri also mentioned, and as we've also seen in the responses from the questions that we've asked. I think many of you have already thought about this as well internally, but of course it has only been a week, so I can imagine that most of you will or are still talking about this internally to see how you are going forward with this. And of course, client relationships will evolve. So we're talking to all of our customers to see how we can support them going forward, and how we can either get together, keep working on CSRD, or work on alternative frameworks together. So here I have another question for you. What is your organization's perspective on the EU Omnibus proposal? And then there are 4 answers, so you'll see the question now. So yeah, I see that a lot of you, or most of you, are still assessing its implications, which I think is very fair. It's only been a week, so I think even us at Coolset, while we have already worked with the leaked documents before and have already prepared to an extent, we're still kind of assessing the full scope of the omnibus and what that means for our customers and ourselves. So very fair that most of you are still kind of assessing the implications. The second point here is that it undermines progress in corporate sustainability. And the third most clicked option is it simplifies reporting and reduces administrative burdens. And the 6% of you have said it has minimal impacts on our sustainability initiatives. Great, thanks for your answer. Moving on. So as we see it, there are now 3 choices for companies. So either you go through with the mandatory CSRD, which is for companies with over 1,000 employees remaining in scope and continue aligning with CSRD. So we see that for companies that either have to keep reporting now as part of the wave 1, or that see themselves having to report with a 2-year delay. We already have customers that have told us, well, we're going to reach that 1,000 employee mark at least then, or already have reached it. So we're going to keep reporting to prepare ourselves and give ourselves the time to do so in the correct way with the time necessary. Then there's the companies that want to keep going with CSRD voluntarily. So this is for mid-sized companies committed to sustainability that are staying on track and recognizing the competitive and financial benefits of CSRD alignment. And then last but not least, we have the VSME adoption. So this is a framework that we're now seeing more about and also discussing internally. And this is for smaller organizations looking for a practical, proportional reporting framework. And these companies can then transition to the VSME. So I think that's also a nice segue to talk a bit about the VSME. What is it? What does it mean? And how does it fit within the current post-omnibus landscape? Well, we're not post-omnibus just yet, but it does feel like things are shifting. So let's have a look. The VSME offers structured ESG reporting and builds on ESRS, which is really neat because it provides you with all of the same ESRS topics, the subtopics, and the subtopics. So for companies that have already started reporting on CSRD and feel like they want to move to something smaller, the VSME aligns with the topics. And it meets stakeholder and investor expectations, even if the CSRD is weakened, because it was originally rolled out as a framework for smaller companies that wanted to have some kind of reporting for their ESG questionnaires that they were sent by their suppliers. It reduces compliance burden while maintaining credibility in ESG reporting. And also good to note, I think, here is that there's no mandatory audit requirement because it's voluntary, which makes sustainability reporting more cost effective in this sense. So I think that's my segue to Gilles to talk a bit more about how we're dealing with that internally and how we're seeing it.
Yes, thanks, Jasper. So, yeah, I think you're not muted. Yeah, thanks. Even though the omnibus will have implications, we see that thousands of companies have already put effort in their ESG motion. And even with the regulatory changes, most aren't looking to scale back. I think that's also clear from the answers you gave in the poll today. They're looking for the right way forward. So, and next to that, investors, banks, corporate partners will still expect sustainability data, and companies that stay ahead of ESG, we see that they are building a competitive advantage. So with the CSRD requirements evolving and VSME becoming a market standard, the focus has shifted a bit from compliance to finding the most efficient and effective way to drive ESG forward. So that's where we can support. So together with one of our partners, Flint, we provide the ability to guide you through this process with this uncertain process at the moment, where Flint will provide support on the internal processes, embedding sustainability in your company, and Coolset provides the platform for the data collection, the collaboration, and the reporting. So how do we at Coolset solve this problem? We provide a flexible ESG platform that evolves with the regulations. So we keep all the reporting templates up to date, continuously expand the coverage so that companies always have what they need without spending time on researching all these frameworks and these changes. So it's one system for all your reporting needs, whether you need to report on under CSRD, VSME, or other frameworks. We offer a centralized solution that eliminates the need for multiple tools. We automate to reduce effort and manual work. As I said, we've built in flexibility for future changes. So if your company decides to move from VSME to CSRD or the other way around, our platform makes it easy to transition between these frameworks without disrupting your existing reporting process. To conclude, we provide transparent and reliable reporting that stands the test of time. So you generate audit trails, you add all your supporting documents and collect all the evidence around your ESG data in one place. Now we're at the end of our story. We are hosting a webinar on the VSME on the March of 19th, where we'll dive deeper into the contents of the VSME, why the EU is pushing this new framework as the new standard for SMEs for sustainability reporting, and also saw some questions coming up on why this would be a preferred solution over, for example, GRI frameworks. Thanks for joining. We have a lot of questions come in. We'll try to answer most of them right now. If we don't manage to do that in time, we will make sure to get back to you with the answers to the questions. So hopefully they'll all be answered today. Maybe we can start with one that I've seen in multiple questions about the adoption timelines for the omnibus. Unfortunately, there's a lot still unclear. As Jasper explained, the proposal needs to go to multiple processes, but maybe good to mention that the proposal actually consists of two parts. First part is the Stop the Clock initiative, which includes the delay of 2 years for Wave 2 and Wave 3 companies. This is all based on assumptions, but the assumption is that this Stop the Clock will be relatively easy to pass through the European Parliament and the European Council. And their expectations are ranging between the summer or beginning of next year. If that Stop the Clock proposal is accepted, that means that the CSRD requirements will be delayed with 2 years. This also gives the Commission, buys the Commission more time to actually form the actual proposal for the changes to the CSRD and its content. So to conclude, nothing is unfortunately clear yet. We do expect the proposal for delay to pass before the end of the year. Then I think one question from Alice that has a lot of upvotes. For those companies that the CSRD is currently covering and who are currently prepping for the first report in 2026, what are the recommendations for these companies on how they should approach the uncertainty this year before final approval of the proposals? Good question. As discussed, it will probably be delayed, but for companies that still have more than 1,000 employees and they will need to report in 2 years' time anyway. What we recommend, if you have already made your progress and if you have already, for example, done your DMA, is to continue your efforts. We see that, next to just having to report, it also provides great insight into your company itself. It's a shame to lose all the progress you've made so far. If you feel that it takes up too much of your resources, transitioning to the VSME is a good way to keep building your data, keep preparing for the eventual CSRD requirements in 2028 without losing your progress and without losing your muscle in that, but also not spending too much resources on it. For companies that are now falling out of scope, we basically have the same recommendation. So if you see that your peers are also still reporting on CSRD, it will be great to keep the same level of reporting. Otherwise, the transition to VSME will allow you to share all your sustainability data with your stakeholders. And if you have companies that need to report on CSRD in your value chain, they will probably also start asking questions about your sustainability data. And due to the omnibus, this will be limited to the amount of data that's in the VSME. So that's why we see that the VSME is a really good framework to transition to if you don't have the resources to do the full CSRD reporting. I hope that answers your question. I think it would be good to go to the next one. Jasper, if you can take the following ones.
Yeah. Let me unmute myself. So here we have a question on the CSRD company size threshold. Employee count includes contractors, or is this just direct HC? Well, I'll assume it means employees. I'm not sure exactly what the acronym stands for. Yes, so I think here it's safe to say that this is employees that fall under your payroll, but mainly full-time employees. So that also depends on how you form your sustainability report. So is this based on a consolidated approach? Then you need to, of course, include all of your employees. But I think it's safe to say that this is mainly your main companies. Yuri, maybe you can also add to this question. I don't know if you have perhaps a bit more insight.
Yeah, so HC is headcount. I know that for sure. I think the Omnibus state that you have an average of 1,000 employees throughout the year. So the average is a new thing. It wasn't that clear in the CSRD previously. So you have to have 1,000 employees on average throughout the year to apply for the new CSRD ruling. The contractors, it depends on the contract of the contractors, whether it's included or not in the company size. So it's not a clear answer maybe. You look at FTEs actually, and not the headcount. So if you have 1,000 average FTEs, then you're obliged to follow the new rules of the CSD proposal.
Thanks, Yuri. I have another question for you, Yuri. If the reporting is indeed delayed for a large EU undertaking that is supposed to report in 2026, which fiscal year should be considered to fall within the threshold? And the second one, do only employees matter, not revenue?
Yeah, revenue does matter, but the revenue threshold didn't change, so it's still the 50 million and the 25 million, and they've bumped up the employees from, as previously mentioned, 250 to 1,000 employees. So that's to answer question 2. Yeah, so if it's moved, then the fiscal year of 2025 is moved to 2027. So then your first reporting year will be 26. Oh, no, let me say it straight. 28. You will report in 28 over 2027. So if your first year is 2026, then you're a listed SME, I think. That moves to 2028. And then your first reporting year will be 2029 over 2028.
Thanks, Yuri. For the sake of time, I'm going to choose some more questions. I'm keeping track of all the questions we're not answering today. And we'll reach out to, we have your contact details. So we'll send you an email with the answer after this webinar. But I think just to ensure that we're going to have some more, some questions that are applicable to, I think, everyone attending. Here's a question from Michelle. Where the value chain is no longer required from all suppliers, do you expect practically that they will still require it, and smaller suppliers with no CSD requirements needs to implement any, and how to be and stay successful as suppliers to these companies? So I think what we're seeing now is that companies still require ESG reporting from their suppliers, but of course it's changing in a post-omnibus world. So we think that, for example, a framework like the VSME will be more used going forward, going ahead. But of course, also companies may still keep reporting on CSRD, knowing that they don't have to submit it to the audit because it's voluntary. And I think that also reduces a big part of the burden because it reduces the cost quite a bit and makes it more accessible for companies to report on this. But I think short answer, companies will still keep reporting or keep asking for ESG performance from their suppliers. We have officially reached the 11:45 mark. I think we'll answer one or two more questions, just to answer everyone's question. For those that have to jump out of the call, thanks everyone for attending. We'll share the webinar recording with you automatically, and you'll also get the slides in the post-webinar email. For those that can stick around for two more questions, please do. Let me just go through them and see which ones we haven't really looked at yet. So here a question from Alex: what is the expected/realistic timeline for this proposal to be reviewed/approved? I think that's a very good question, and I think it's something that's keeping everyone busy. Also, seeing the uncertainty associated with an omnibus proposal. So I think what we're seeing now is, for example, the CSRD, the CSDDD, and the EU Taxonomy were also all proposals at some point, and they all took between, I think, 11 and 25 months to be approved. But what we're also seeing now is that the European Commission has already implemented a special task force or a special department, so to say, within the European Union to look at the omnibus regulation. So we know it's being fast-tracked internally, and we know that they're looking at it. And I think they also know that there's a lot of political pressure and a lot of kind of pressure from the market to go to this quickly. So I could imagine that it's implemented within a year. But at this point, it's just it's a guesstimate. Maybe Yuri, I don't know if you have anything to add to that.
No, not really. It's just depending on Europe. Yeah, which is also a difficult part. It could take 9 months, but I think the CSRD took 22 months. So I do think there's a difference between the two proposals that Gilles explained. They want to fast track actually the timeline. So they want the postponement will be a bit more clear and a bit more easy to push through Europe, I think. But the other regulation will take some time, is my expectation.
Yeah. Thanks, Yuri. Last question from Henning. Have the thresholds for Wave 2 and 3 also changed? Have all of them been raised to 1,000 employees? So Wave 2 is the companies that originally had to report, or actually still have to report over 2025 with a report in 2026. And Wave 3 is the SMEs that were supposed to report afterwards. So for Wave 2, it's been raised to 1,000 employees, where the other financial metrics have been left unchanged, where Wave 3 has been completely scrapped. So for now, SMEs no longer have to report, but may do so on a voluntary basis. But they have said that they won't for now focus on rolling that out. Yuri, you have anything to add there?
No, I think that's a complete answer. Yeah.
Perfect. I see that there's quite some questions that we haven't got to yet. Rest assured, we will get back to you. Please give us some time to go through all of them afterwards. But we will send you an email with your answer. Thanks so much, everyone, for your attendance today. Our email addresses are here on the screen. So should you have any specific questions that you're thinking about after the webinar or coming days or weeks, feel free to reach out to us. We're very happy to help you. For now, thanks everyone for attending, and I wish you a very nice rest of the week.